Hello, everyone. Thanks for joining us this morning. My name is Dave Lubnick, and I'm joined here with Kyle Gears. And we are looking forward to going through the 2021 fund flows from YCharts. Excited to dig through this. We've got a lot of great material to show you, topics here related to fund flows throughout 2021, and even a little look forward to 2022 here and what happened in January as well. For many of you on the call here, you're familiar with YCharts, either from an advisor capacity or a wholesaling capacity. For those that are clients, thank you for your business. We're excited to be working with about 6,000 advisors at this point and almost 2,000 wholesalers leveraging YCharts. Folks are using the tool for research, market data, client communication, as well as sales enablement, and having it as a dynamic resource on the fly for those conversations that the wholesalers are having with advisors. So again, thank you for everybody joining us. Looking at the agenda here, we're going to talk through what happened in 2021 related to flows at both the combined level and breaking it out by ETFs and mutual funds. Then we'll focus on just the fourth quarter and look at what happened in those 3 months. And then look forward to what just happened in January. Our fund flow reports for January just came out yesterday. Some really interesting moves in the flows for the month of January with all the volatility that took place. There will be Q&A available throughout the presentation. So if you have a question, please leverage that chat functionality in this tool to ask those questions, and we'll try to get to them either during the presentation or at the end. In addition to the Q&A, this presentation here will be recorded, and that'll be sent out tomorrow to all registrants. And a reminder that if you are interested in looking at any of these materials yourselves, they are available through your subscription to YCharts, through the support dropdown at the top of YCharts, navigating to the support topics, and then resources, and then fund flow reports. And that's a great area of the site to view not just the reports that we'll be going through, but actually all of the historical reports are there as well. So with that, let's dig in. Kyle, I'm excited to get through this with you here. And we're going to start off by looking at overall flows for 2021. We've got this broken out here by the broad categories. And what you'll notice here, obviously, is that fixed income led the way. Almost $680 billion flowed into fixed income throughout the course of 2021. That was followed by money markets and equities, kind of tied for second, with then a big drop off to fourth place. What I find interesting about this is that in 2021, prior to rates rising, the 10-year was pretty range bound, actually. For all of 2021, it was basically bouncing between 1% and 1.75%, averaged 1.44 for the year. And when you look at what the returns were for 2021, just to put that in everybody's mind there as a reminder, the Barclays Ag returned negative 1.75 total return, and the S&P 500 returned almost 29% from a total return perspective. So clearly a move to a lot of fixed income and money markets in 2021, but depending on specific timing, it may not have been the best investment for a lot of people throughout the year.
And one of the things that really interests me here is the amount of flows back into money markets. And you'll see a little further in the presentation that a lot of that was Q4. So a lot of risk off in Q4, particularly at the end in December. Next, we have 2021 flows on equity style. And I feel like 2021 was almost like those stadium videos that they have at sporting events where, you have like a hot dog, nachos, and pizza racing each other. So value got out in front early on by a pretty big spread. But then toward the middle of the year, everything was pretty close. And then growth actually finished as the top performer in 2021, if we're looking at something like large caps, and just giving you what of an idea on what that performance looked like. If you take a look at blend of the Russell 1000, returned you 26.45%. Growth returned 27.6, value returned 25.16. But it looks like a lot of investors wound up going the blend route, as you can see here. Large blend brought in many more assets than everything else almost across the board.
Yeah, I think the other interesting thing for me here is you see the large outflows from large growth. But if you break that down, most of those outflows were actually not in the fourth quarter. Most of those outflows were in the first 9 months of the year, which is interesting to think about. It wasn't necessarily that exodus that maybe has occurred more recently. It was really kind of earlier in the year.
Yep. Yeah. Taking big profits on growth. And then with the thought of rising rates in the future, a lot of chips taken off the table there.
This next slide is one of my favorites that we have in YCharts and in those monthly fund flow reports that get sent to our clients, because what we're able to do here now is to take that combined flow information that we just looked at on the prior slide and break it down by mutual funds and ETFs here. And this is really an interesting visual that I always look forward to every month because it just kind of paints the perfect picture. You look across the 9 style boxes here for equity, and you see ETFs are positive for all 9 of them. And you see mutual funds are negative for 8 out of 9 of them. So really just tells the story that throughout 2021, there was the outflows for mutual funds and the inflows for ETFs.
And another thing that's interesting about this graphic is, you see a lot of outflows from funds, but once we dig deeper into the data, which we have access to, you'll notice that maybe it's a lateral move moving from a fund that's a bit more costly than an ETF. That same provider or same asset manager might provide an ETF with a similar strategy that might be a couple basis points cheaper. So, this is a surface level data, but we have the ability to dig into that a little bit deeper to really see the full story. Next, we have sector equity flows for 2021, and financials led the way here. A lot of people placing bets on financials with anticipation of the rate rise and those firms being able to generate more interest income. Inflation plays, financials tend to be up there. Following that, we have real estate, another inflation play. To no surprise, we see large flows into real estate as well. You talk about the amount of appreciation real estate has had, the fact that rents and lease amounts are going up or increasing, all leads into helping battle inflation. And then 3 and 4, you have natural resources and energy, and you can almost group them in the same bucket. If you look at something like CPI, that's one of the biggest increases that we've seen is energy, whether that's oil or gas or nat gas. All those have increased significantly, and folks investing in those sectors have been rewarded.
Yeah, another thing I look at here is seeing financials leading the way, and then looking at 2022 and what year-to-date performance has looked like across the different sectors. Financials has been the second best performing sector so far this year, behind only energy. So clearly the move into financials in 2021 has paid off for people as we've gotten underway here in 2022. All right, so now we have wrapped up the look back on all of 2021, and let's focus for a few slides here on just the fourth quarter, because there's some really interesting information here. And one of the first things is in regards to money markets. So you can see here for the fourth quarter, money markets brought in $210 billion. What's interesting is that for the full year, it was about 500. So about 40% of the flows into money markets occurred in the fourth quarter. But then let's break that down further by month. So in October, it was 12 billion. In November, that ramped up to 69 billion. And in December, it was 130 billion. So clearly there was this huge risk off shift in the fourth quarter, and in particular, as we got to the end of the year. So that's really interesting. The other interesting piece of this is that equities actually were in second place. So you start to see people maybe getting into equities there a bit as well in the fourth quarter.
Yeah, that money market number, I mean, it's huge. So could mean a lot of things. Once again, here's the data. It's all a matter of how we break that down. Are we going risk off? Are we possibly closing out positions that we've made profits on? Are we taking some tax losses? But that number, if you look back historically, a lot bigger than what you've seen in the past.
And again, that is the beauty of looking back in YCharts. In that support section, is you can pull up all those historical reports, view those month by month numbers if you're interested.
Here we have Q4 equity style breakdowns. We talked about this from the entire year of 2021. Here's Q4, and you take a look at large blend and absolutely demolishes everything else. A lot of money pouring into large blend, and could be the fact that from a tactical perspective, you might be thinking, okay, is value the play? Is growth the play? Maybe you've made those changes to the portfolio over time, but good chance that investors have gotten sick of trying to guess, which side of the fence they should be on, split it down the middle, and you go with large blend. Really hard to argue something like the S&P or index tracking ETF or a strategy that tracks to the S&P, get the best of both worlds from a risk versus reward perspective. And the narrative has been flip-flopping. Is the Fed aggressively going to hike rates, or are they going to be a bit more lenient? I feel like every week it might be different. Investors might have gotten tired of that, and like I said, split the difference, went down the middle with blend.
Yeah, another thing just stands out to me on this slide is just the sheer number of assets in the large cap space. Clearly mid cap blend and mid cap blend and small blend led the way in those spaces, but they're about a tenth of the flows of large blend. So for those asset managers that have products across the spectrum, clearly large is the space that they're seeing the most flows in.
Yeah, also notable that growth saw outflows across the board in Q4, large, mid, and small.
So this next slide, similar to the one we showed you a few minutes ago for all of 2021, but now we're looking at just the fourth quarter again and breaking out those flows by mutual funds and ETFs. Different time frame, similar story. All 9 ETF categories saw inflows in the fourth quarter. All 9 mutual fund categories saw outflows. You see, again, large growth leading the way, but quite a bit in large blend and even large value on the mutual fund side. And then on the ETF side, the big inflows for large blend in particular relative to value and growth. So clearly that shift, Kyle mentioned it earlier, we're talking to wholesalers on a daily basis. It seems like the asset managers that have ETFs already, that is a big piece of the conversation. And for those that don't, it seems like a lot of them are launching now or in the near future.
Yeah. And once again, when looking at the disparity between funds and ETFs, that might not mean all actively managed products, or it most definitely doesn't. It might be a matter of an index mutual fund losing assets to an index ETF, or an index mutual fund losing assets to an actively managed ETF. So we have the data where you can dig in a little bit deeper and really get an understanding of how those assets are flowing out of funds. Now we have the Q4 sector equity breakdown. And it's interesting to see technology sort of leading the way here. I had a really good Q4. So those bets were right, but fizzled out a little bit. And we've had a lot of volatility with the beginning of this year, but almost neck and neck, you have real estate there. And, assets have continued to pile into things like REITs, whether that's on the actively managed fund side or even the ETF side. Great play to combat inflation as housing prices are appreciating, real estate in general prices are appreciating, paying you a solid dividend, and rents and things of that nature are also increasing. And it's been the same theme that we saw for 2021, financials followed by natural resources. Interesting also to see consumer cyclicals in there. Probably not going to be seeing a whole heck of a lot of flows into consumer cyclicals this year, but throughout 2021, consumers were spending.
Yeah, and then I look at this also, and again, I think about what's happened so far in 2022, and you see technology leading the way. Unfortunately, as everybody probably knows in this call, when you look at 2022 performance year to date by sectors, you've got technology, which is kind of either number one or two as far as worst performance so far this year, along with consumer discretionary. So, unfortunately, not great timing for those inflows into technology in the fourth quarter as we look at returns so far this year. That said, another interesting thing, and we'll get to this in a few minutes, but it's interesting to look at the January flow report. Again, we'll get to that in a few minutes. There's a little bit of a bifurcation there within technology, where those assets have gone. In particular, triple Qs were a big inflow, and then you see some other technology ETFs with outflows. So we'll get into that a little bit later here. All right, wrapping up here almost the 2021 conversation, and we're looking at fixed income now. And what you see here are kind of four sections to this report, starting on the far left, all of 2021, then the second half of 2021, then just the fourth quarter, and then just December. So working our way to more recent here. You see bank loans leading the way clearly for all of the year. But then as we get towards the latter half of the year, and in particular the fourth quarter and even just December, you see long government really leading the way, along with high yield bond in particular in December. So it's always great to kind of peel the onion back and look not just at some of the categories, broadly speaking, but specifically within fixed income here, what's happening within these sectors. And I think a lot of conversations that Kyle's been having on a daily basis with our wholesalers speak to these exact moves that we're seeing visualized here.
Yeah, and bank loans been a huge driver of assets, and it could be argued that's one of the most attractive plays in a rising rate environment. Now, they've had a great run already, but you might look at something like high yield and say, okay, well, the spreads are near the lowest point they've been in the last 10 years. How much upside do I really have here versus bank loans, which have a bit more attractive of a spread? And that's kind of the thing is, how have these different asset classes or sectors of fixed income performed during rising rate periods? That's what everybody's focused on. And bank loans have historically done well. High yield has in addition to that, but like I said, the spread argument might stand there. And it is really interesting to see long government. Maybe investors were betting that rates might have topped out near term, and that hasn't happened. So always interesting to see that as well. And just to give you a bit of perspective in terms of performance to tie in with some of these flows, from a 1 year look back period as of the close yesterday, we're talking category average performance. Bank loans have done 2.66%. High yields basically flat at about negative 0.21%. Then you have core bond or the ag, 4.52% to the downside. And then if you're talking long-term government, negative 6.93%. So just to put things into perspective with this graphic. And then last but not least, we have the story of gold, and everybody talking about inflation hedges. Your probably most traditional inflation hedge. And looks like investors are tired because gold hasn't really stood up to that. It hasn't performed as expected. So you take a couple of the ETFs, which give you the best way to gain exposure to gold. In 2021, we saw massive outflows, 12 billion from gold. So into potentially better or more appropriate inflation hedges.
Yeah, we don't have it in this presentation, Kyle, but maybe for the next one, we'll have to line it up with cryptos, because I do wonder with the flows you're showing for gold, if maybe some of that money has instead gone into cryptos. In YCharts, we have all the cryptos, the prices, the supply, et cetera. So as a user, you can certainly pull that information, but that might be interesting to think about as well here. All right, so shifting gears now, let's actually look at the January flows. Again, these just came out yesterday. Some of you might be familiar with the fact that we produce 2 PDF reports on a monthly basis. These automatically get emailed to all subscribers of YCharts, and then you can also download them straight from the website as well. One of the reports is focused on strategies and looking across most of the Morningstar sectors at the combined flow level, as well as then breaking it down between mutual funds and ETFs. And then the second report we get into, which we'll get into in a few minutes, highlights the top categories for inflows as well as outflows, and then some specific funds within those categories that saw the largest inflows and outflows. The nice thing with these reports, again, is they come out monthly. They're easy to digest in your inbox, but they also have links. So all of those category names are hyperlinks. You can click that. It'll take you into YCharts. We'll do that in a minute and show you how you can actually then view the full list of securities. So looking at this report here for the month of January, a couple things stand out to me. First of all, in December, we saw for large blend a lot of assets flowing out of mutual funds and into ETFs, kind of what we saw on most of those visuals for most of 2021. In January, there's a big reversal taking place here. As a overall category, large blend was pretty flat, down 3 billion, but that's not a large percentage of such a category of so many assets. But what you see is mutual funds had 15.5 billion inflows right below that, the dark green, and ETFs had 18.5 billion outflows. What do you think about that, Kyle?
I mean, really interesting because it basically reverses the trend based on what we've been seeing. And it could be a move back to active management for folks who are fine with passive investments. It might feel like they don't have as much control now as soon as volatility hits and they're a bit undecided.
Yeah. And then looking at large value, that catches my eye as well. Almost 11 billion of inflows. Maybe some people taking advantage of the pullback in the market right there to buy some value names. But then what surprises me a little bit is that it actually was almost all in the form of ETFs. Mutual funds in the large value space actually saw a little bit of outflows. So that ran a little counterintuitive to what I might have expected. But nonetheless, inflows to value there, capitalizing likely on the pullback that we saw in January.
Yep. And the one thing that I would note, the additional item on this report that I find really interesting is if we go down and look at fixed income, I've never seen more red on the fund flow report. As we demonstrated earlier in the graphic, I mean, fixed income saw the bulk of flows in 2021, but now with rates rising, trying to dial back duration or tactically figure out where you should be allocated in this rising rate environment. I mean, bank loan, clear-cut winner here. Almost 10 billion in assets went into bank loans last month combined. And this is another space where mutual funds dominate ETFs. And we've seen ETF flows pretty strong to the equity side, but mutual funds are still the top dog when it comes to fixed income. The other one I'd point out is ultra short. So that saw almost 6 billion in inflows, maybe taking some risk off, really limiting that duration as we've seen shorter term rates rise a little bit recently.
The other thing that catches my eye here, when you look at core bond and core plus with outflows, Kyle, you and I look at these reports every month when they come out, and it's been a long time since we've seen those outflows from core bond and core plus. For most months of 2021, those categories would actually be leading the inflow reports. So interesting to keep an eye on that and how that plays out over the coming months.
Yeah, absolutely. I mean, you take a look at 3 months or the 1 year, look at the amount of assets that have gone into core products. And, traditionally it's not a tactical play. It's a longer term play. So yeah, your yields are going to get higher. Everything's going to kind of even out, but you might take a little bit of a beating over the short term when rates shoot up.
Yeah, you've got core bond almost doubling up the second closest fixed income category on a 1 year basis. It's just incredible.
So really quickly, Dave commented on the fact that you can click into individual categories that you're interested in digging deeper on. So we take a look at large value. I opened that up a little bit earlier. Let me just jump back into it. And you have a full list of every single product in that category sorted by 1 month flow. So you have a great idea of which funds are bringing in assets. You click the top of the column, you sort it the other direction. Now you know funds that are losing assets that might be good targets if you're selling into that category. The other thing that you can do is there's plenty of flexibility. You can pull in additional data points. So what I did is I actually added an info column for index fund. This is basically your way to identify passive products versus active products. So a lot of money going into index funds or passive products, as you can kind of scroll down and see here, the no's are going to be your actively managed items. So another great way to kind of get to that next layer of intelligence.
Yeah, this is a great report also because, as Kyle mentioned, you can add other columns here. So if you want to add a column for expense ratio, for example, or maybe performance related metrics, looking at trailing 1 year, 3 year, year to date, whatever the performance might be, either on an absolute number or on a ranking category. We're looking at value here. Maybe you want to add in a PE ratio or some other fundamental metric as well. So we've got all this available at your fingertips to add in and manipulate these reports as it's helpful to you. Hopping then to the last report that we're going to cover today. This here now is that second PDF report that hits everyone's inbox on a monthly basis. It's 5 pages. First page highlights just kind of what happened in the markets and economic data. Cover 300,000 economic indicators in YCharts. It's a global data set, just highlighting some of the popular rates and spreads here. And then we dig into 2 pages of mutual funds and 2 pages of ETFs. There's 1 page for inflows, 1 page for outflows. So when we look here, we're looking at just mutual funds and which categories had the largest inflows. So we see large blend leading the way, followed by bank loan, followed by ultra short. Some of the topics we've already discussed. And then as you go down, you notice in the outflow section that it's going to be led by money markets, followed by large growth, high yield bond, core plus. Basically never saw core plus as a top 5 outflow category last year, and foreign large blend. So a couple things I'd mention here, and then Kyle, I'm sure you've got some thoughts as well. The money market number. I mentioned earlier that in December, money markets had about 130 billion of inflows. We basically saw all of that and a little more leave money markets in January. Just fascinating.
Yeah, I had that a little bit of a dip in January in the beginning, and maybe folks wanted to take advantage of it. So we saw money markets, unload a little bit there and get back and invest it into the market. And a couple other quick notes. If we go back up to the inflows, they talk a lot about, home bias or U.S. bias. See diversified emerging markets and foreign large growth. So, international growth and EM taking some assets in, which is something we haven't seen for a while. And then as we scroll down, we'll keep going here. Dave made a great point on core plus. Haven't really seen that as an outflow category much at all over the last few years. But then we break it down to ETFs as well. And we see large value leading the way there, foreign large. What's also really interesting to me is we're picking up leveraged equity as one of the top categories for flows, 5 billion plus. So your triple leveraged Qs and semis, biotech, small cap. So, a lot of the higher risk type items looks like, traders or investors were looking for a bounce there. Probably say traders more than anything on the triple leverage stuff. And as we scroll down, go ahead, Dave.
I was going to say that's fascinating. I think you're probably going to the same place here, which is the fact that triple Qs for the month of January had 3.5 billion of inflows. But then you scroll down and you look at which categories had the largest outflows for ETFs, and you got technology coming in 4th place. And then you look down at the 5 ETFs within technology, and it's kind of the typical ETFs that you'd look at. So clearly, this is, again, peeling back the layers of the onion here, not looking at overall technology, but looking specifically within technology, which ETFs saw the outflows and then which saw the inflows, like triple Qs.
That basically wraps up that second report. But earlier, Dave mentioned you do, if you're a YCharts client, have access to the Fund Flows library. And we have instructions on that earlier in the presentation, but you're ultimately going to go to support topics and then click on Fund Flows to access this page. But you can go back and look at any historical report that you want. If you're curious as to what everything looked like flow-wise from the end of 2020, you can go back to January 21's report, pop that open, and look at the differences or the changes. The other thing you can leverage if you're working with clients and you want to weave in some of this data or information into presentations, we have a deck that you can download with visuals. We just started doing this in January, but you can download these visuals similar to what we included in our presentation today to focus on the flow areas and the trends with your clients.
Yeah, there are two things I'd mention here. First of all, a lot of history. This goes back a couple of years if you want to kind of look through month by month. And then for our friends in Canada, we have separate reports for Canadian flows. We didn't touch on those today, but clearly those are all there. Those get automatically emailed to our Canadian clients. Same setup, same visuals. So some great information there as well. So with that, kind of wrap up the presentation here. We did get a couple questions. Let me talk through those really quickly here. One of them was asking just about the frequency of that fund flow information. It is monthly. So the way it works is typically by about the second day of a new month, you will see the updated fund flow information in the website. And then what we do is we usually wait until around the 15th of the month to produce these PDF reports just to make sure that all of the flow information is in the system. And then we shoot those out to everybody. Another report came in, was related to SMAs and whether or not we have flows on SMAs. So it's a good question. As some of you may know, we added SMAs to YCharts a little over a year ago. It's a great data set. It's both SMAs as well as models. Basically anything that's loaded up into Morningstar, that's who we're pulling in from for that information. It's a great data set. A lot of people love the fact that they can look at those SMAs and models right there in YCharts compared to others, compared to other types of securities, economic data, et cetera. As it stands right now, we do not have flow information on those SMAs, however. So it is just going to be on mutual funds and ETFs. So with that, again, thanks everyone for your time. If you have more information, or if you want more information on YCharts, you can visit YCharts.com. For subscribers, you see the link there for the Fund Flow Library. 7-day free trial available to anybody through that YCharts website as well. So thanks again for your time. Have a great rest of the day. And everybody take care.